Tesla, which is recognized for its revolutionary electric automobiles and renewable energy solutions, revealed its lowest profit margin in 5 years. Rising production costs, increased competition, and price cuts on specific models all have an impact. While this has raised worries among investors and experts, Tesla's strong financial basis and continued innovation signal that the company is well prepared for future development. Tesla has focused on innovation and sustainability throughout its journey to become an international sensation, which has helped it to charge higher prices for its electric cars. The company's early struggles with profitability were brought about due to the significant expenditures associated with creating new technologies and manufacturing facilities. An important turning point was the launch of the Model S in 2012, which revolutionized the EV industry with its remarkable blend of performance, elegance, and range. Tesla's profit margins increased with the release of later models, including the Model X and Model 3, and increased manufacturing efficiency. But what elements contributed to Tesla's lowest profit margins? Tesla's lowest profit margins in recent years were observed from 2017 to 2021. During these years, the company faced significant production and development challenges, especially with the increased production of Model 3. There are issues related to producing enough automobiles, as well as the high expenses of maintaining and expanding operations. Despite minor improvements, margins have remained under pressure. Consequently, as its operations developed, manufacturing expenses increased. The construction of new gigafactories, such as those in Berlin and Texas, needed a significant monetary investment. These expenditures are critical to Tesla's long-term growth, but they have reduced profitability in the short term. Furthermore, the COVID-19 pandemic and geopolitical tensions have disrupted global supply chains, raising the cost of raw materials and components and lowering revenues even further. In recent years, there's been a significant shift in the competitive landscape for electric vehicles. Although Tesla used to be the industry leader in EV sales, other automakers have entered the market with a wide variety of electric cars. Price effects are the result of this increasing competitiveness. To keep its hold on the market, Tesla has frequently reduced the price of its models, which has reduced its profit margins. Profitability has been impacted by the company's move to minimize the cost of the Model 3 and Model Y in an attempt to boost volume. Shortages of semiconductors and other crucial components have caused manufacturing delays and raised expenses. Due to challenges with the supply chain, Tesla has to modify its operations, and in some situations, they prioritize some models over others. While Tesla maintained recovery in dealing with these issues, the effect on manufacturing efficiency and prices has been unavoidable. Tesla has invested in new markets and production sites in an effort to grow internationally. The establishment and operation of gigafactories in China, Germany, and the US required significant financial outlays. Tesla's dedication to innovation has both advantages and disadvantages. On the one hand, it separates the firm from the competition and enables it to preserve a technological advantage. However, the massive spending in research and development, or R&D, necessary for maintaining this competitive advantage has resulted in greater operational costs. The development of innovative technologies such as full self-driving, or FSD, new battery structures, and the Tesla bot demands significant money, which might have an impact on short-term profitability. As an important player in the electric vehicle sector, its sales and market capitalization have grown significantly in recent years. However, the recent drop in profit margins has brought significant problems. Despite difficulties with profit margins, Tesla has maintained strong sales growth. This expansion is fueled by rising sales of electric cars, specifically the Model 3 and Model Y, which have found momentum in a variety of areas, reporting revenues of approximately $24.93 billion. an increase of around 47% compared to the same period in the previous year. This company's income is additionally enhanced by its energy-generating and storage devices, as well as software and services. Tesla's net income for the period was around $1.44 billion, down from $2.32 billion in the previous quarter. Tesla's capital expenditures for the quarter were around $1.9 billion. This spending indicates the company's continual efforts in increasing production capacity and improving technological capabilities. The market and investors have responded differently to Tesla's disclosure that the company's profit margin is at its lowest level in 5 years. The importance of this revelation for investors comes from the fact that Tesla's stock value and the whole electric vehicle industry are significantly impacted by its financial health and strategic direction. Tesla's stock price volatility reflected the market's rapid reaction to the announcement. After the disclosure of the financial data, Tesla's shares fluctuated as investors reviewed their positions. The trading volume for Tesla's shares increased significantly, indicating greater interest from investors and activity. This increase in volume frequently occurs after significant circumstances, as traders and institutional investors modify their portfolios in response to new information. Based on the timelines of investments, reactions have varied. Long-term investors have been largely positive due to their focus on Tesla's strategic plans and growth prospects. Despite short-term margin pressure, they believe that the company's expenditures in technology, production capacity, and market development are essential to its future success. On the other hand, short-term traders and investors have been more careful. Some have decreased their exposure to Tesla due to worries about growing expenses, problems with the supply chain, and increased competition, which reflects a desire to reduce possible risks. But how can Tesla improve operational efficiency to lower EV costs? We'll find out about it at the end of the video. Financial analysts have expressed varying opinions on Tesla's chances going forward. Some analysts have reduced their targets for both stock price and profit due to margin limitations. The management of Tesla is concentrated on the company's long-term vision, strategic objectives, and initiatives to increase production, create new battery technologies, and investigate new markets. The future of Tesla has both enormous opportunities and problems. The corporation is focusing on worldwide development and expanding its services beyond electric vehicles, including energy storage, solar solutions, and artificial intelligence ventures such as Tesla Bot. These initiatives are intended to generate new income sources and maybe increase profit margins over time. To do this, Tesla must improve operational efficiency by reducing manufacturing processes, optimizing the supply chain, and successfully controlling costs. The company's vertical integration approach, which includes its own production of important parts, is critical to cost management and profitability. Tesla's strategy is focused on innovation, with significant investments in next-generation battery technology, self-driving capabilities, and new car types. While these developments may improve Tesla's competitiveness and profitability, they also present risks if they demand more time and money than expected. Tesla must also handle legal and environmental challenges, such as government laws that encourage EV adoption. Strategic partnerships in areas such as battery technology and software development might help Tesla improve its market position and their technical achievements. By 2027, it is expected that Tesla will produce EVs at a lower cost than comparable diesel and petrol vehicles. Tesla is at an important turning point in its development as it deals with these financial issues and the constantly changing EV market. If you enjoyed this video, please hit the thumbs up button, and you can watch more videos like this on our channel.